Welcome, curious minds, to the deep dive. Today, we're diving into a really remarkable corporate story.
Yeah, it's quite something.
Imagine a company just, teetering on the edge, about to vanish from the public markets, and then suddenly it completely reinvents itself into something, well, frankly, fascinating.
Indeed. We're looking at SharpLink Gaming today, ticker SBET on NASDAQ. And this wasn't just tweaking the business model. Oh, no. This was a massive strategic overhaul, turning a struggling iGaming company into the world's biggest publicly traded holder of Ethereum.
That's the journey we want to unpack for you. We'll explore this huge transformation, its potential as a major Ethereum crypto play.
A big one.
And really get into why this is so compelling, especially, and this is key, with an Ethereum co-founder stepping in.
That's a critical piece.
Let's start at the beginning, though. Set the scene. So before the big crypto pivot, what exactly was SharpLink Gaming? What kind of shape were they in?
Well, SharpLink was operating as an online marketing firm. Their focus was the U.S. sports betting and iGaming space. But their main legacy business, the PAS.net network, it was under serious financial pressure, real strain.
How bad was it?
Bad enough that they were facing delisting from NASDAQ. That was looming by January 2025. They weren't meeting the minimum share price, the $1 rule, or the minimum stockholders' equity of $2.5 million.
It's a double trouble.
Exactly. They got the deficiency notice back in July 24, and by early 2025, NASDAQ said, nope, no more extensions. They were in a really tight spot.
Really up against the wall then. So that's when they launched this strategic alternatives process. Sounds serious.
It was. It was basically a corporate rescue mission, but a very deliberate one.
How so?
Well, they'd already made a smart move earlier in 2025. They sold off their fantasy sports and game development arms for about $22.5 million.
Okay.
And they used most of that cash, around $19.4 million, to wipe out all their debt.
So cleaning the slate first?
Precisely. That left SharpLink debt-free. Still small, still struggling a bit, but now it was a clean public shell.
Like an empty vehicle ready for something new.
Exactly. Perfect for a kind of reverse merger type deal. So the sequence was clear: clean up the books, prepare the structure, bring in a ton of capital, and then transform.
And that ton of capital came, perhaps surprisingly, from the Ethereum world. Tell us about that $425 million private placement. That sounds like the turning point.
Oh, absolutely the turning point. It was announced May 27th, 2025. A massive $425 million private investment. This wasn't just patching holes, it completely recapitalized the company. And strategically, they declared Ethereum, ETH, as their primary treasury reserve asset.
Okay, so they're basically betting the company treasury on ETH.
Pretty much. And they immediately and intentionally drew comparisons to MicroStrategy and its Bitcoin strategy.
Right, the Bitcoin proxy stock.
Exactly. For SharpLink, this wasn't just a pivot. It was a lifeline that completely redefined what the company was. They closed that deal on June 2nd, selling over 69 million shares at $6.15 each.
A huge infusion? But who put up that kind of money? And you mentioned an Ethereum co-founder. What's the story with Joseph Lubin?
Yeah, this is maybe the most crucial part. The lead investor was Consensys, and its CEO is Joseph Lubin.
The Joseph Lubin, co-founder of Ethereum.
The very same. And on June 2nd, the day the placement closed, he became chairman of SharpLink's board.
Wow. Okay, that's significant.
Hugely significant. It dramatically changes the perception of risk for a lot of investors. It sets SBET apart from just, say, speculating on crypto prices. Lubin isn't just commenting on trends. He built the underlying tech.
A builder, not just a believer.
Exactly. And Consensys isn't just investing, they're a strategic advisor. That means SharpLink gets incredible access to deep expertise in staking, DeFi, security, everything, Ethereum.
It's like having the architect design the furniture, too.
Something like that, yeah. It implies a level of insight and guidance you just wouldn't normally get.
So strategy-wise, it's more than just hodling ETH, then?
Oh, much more. A really key difference is their plan to stake 100% of their Ethereum.
Staking, so putting the ETH to work to earn more ETH.
Precisely. It generates a yield, a consistent return. That gives them a secondary revenue stream that pure Bitcoin holders like MicroStrategy don't have.
Interesting.
And Lubin's been very clear in his statements. He talks about positioning SharpLink for global leadership in digital commerce, using Ethereum as programmable, yield-bearing digital capital. It's framed as much bigger than just a treasury play. It's almost like they're aiming to show the traditional finance world how institutional Ethereum treasury management should be done.
Okay, this sounds ambitious and complex. How did they actually do it? Acquire all that ETH, fix the NASDAQ issue, all while coming from such a weak position.
It took some pretty sharp financial footwork. First, that NASDAQ problem.
Right, the delisting threat.
They dealt with that using a 1-for-12 reverse stock split, announced May 1st, effective May 6th. That artificially multiplied the share price by 12, pushing it well above the $1 minimum.
Oh, a classic move.
Yep. And it worked. By June 5th, they were back in compliance with NASDAQ. Think of it as a quick way to meet the height requirement, like you said.
Clever. But that doesn't pay for hundreds of millions in Ethereum.
No, that funding came from two main sources. First, that $425 million private placement we talked about, huge chunk right there. But second, and this is crucial for their ongoing strategy, a massive $1 billion at the Market Equity Facility, an ATM facility.
An ATM? Like, they can just sell shares whenever they want.
Pretty much. It allows them to continuously sell new shares directly into the market at whatever the current price is. It's a way to keep raising capital, especially if the market values their stock highly, to buy more ETH.
And they've been hitting that ATM hard.
Oh, yeah. Aggressively. By June 13th, they'd raised about $79 million from it, another $27-odd million by June 24th, then $24 million more by July 1st. And they used that cash to buy ETH. By June 13th, they had over 176,000 ETH, bought at an average of around $2,600.
Wow.
Then they had another 12,000 ETH by June 24th, slightly cheaper at $2,500. And another 9,500 by July 1st, cheaper still at $2,400.
So constantly accumulating.
Exactly. That brought their total to nearly 200,000 ETH, 198,167 ETH to be precise, making them the biggest public company holder of Ethereum.
And is this ATM strategy good for shareholders? Selling more shares sounds like dilution.
It is dilution, but here's the arbitrage angle. They sell stock when it trades at a premium to the value of the ETH it holds per share. Then they use that cash to buy more ETH. If done right, it actually increases the amount of ETH per existing share. It's accretive, a growth engine fueled by the market premium.
Okay, I see. A bit complex, but potentially powerful. And the staking, what returns are they actually getting?
They've confirmed 100% is staked. As of early July 2025, they'd earned 222 ETH just from staking since June 2nd. Analysts looked at 1 week's earnings, 102 ETH, and figured out an approximate annual yield of about 2.7%.
So not huge, but it's consistent income on top of the asset itself.
Exactly. It adds another layer to their value compared to just holding a non-yielding asset.
Now, holding almost $500 million in crypto, that sounds risky. How are they keeping it safe?
It definitely carries risk. Custodial risk is a big one in crypto. But given the sheer amount, and crucially, Consensys' involvement as strategic advisor,
Right, Lubin's company.
it's almost certain they're using top-tier institutional-grade security. We're talking qualified custodians, cold storage, multi-sig wallets, probably hardware security modules, robust insurance.
The works.
The works. Best practices for securing that much digital asset value. The Consensys link strongly implies they haven't cut corners here. It's about managing that rift down as much as possible.
Okay, so if they're gunning to be the MicroStrategy of Ethereum, let's compare them directly. How does SharpLink stack up against MSTR? Is it just ETH versus BTC?
There are some really key differences beyond just the coin. Yes, both turn struggling businesses into crypto proxies. But the asset itself is fundamental. SharpLink holds ETH, which, as we said, can be staked for yield. Bitcoin doesn't inherently do that.
So SBET has an operational income stream MSTR lacks.
Correct. That makes SBET a bit of a hybrid, part asset play, part yield generator.
And how they funded these crypto buys differs too, right?
Massively different. MicroStrategy, under Michael Saylor, famously leaned heavily on debt. Billions in convertible notes. Lots of leverage.
Okay.
SharpLink, on the other hand, has funded everything purely through equity. That $425 million private placement and the ongoing ATM sale.
So no debt for SharpLink, but constant share dilution instead.
That's the trade-off, exactly.
And the leadership difference. You called Lubin a builder and Saylor a believer. How does that play out?
I think for investors, it's a significant point. Having Lubin, an Ethereum co-founder, as chairman gives SharpLink unique technical and strategic credibility. It suggests they're not just holding ETH, they're potentially building with it within the ecosystem.
Crypto direct integration, maybe.
Potentially. Saylor's incredibly influential, a powerful Bitcoin evangelist, maybe its most powerful advocate. But he's viewed more as promoting the asset. Lubin's involvement implies a deeper foundational understanding and perhaps a role in pioneering how institutions manage ETH. Some might see that as an edge for the long-term vision.
Interesting distinction. So how does the market treat them? Are these crypto proxies valued just on their crypto holdings, or is there a premium?
Generally, the market values them at a premium to their net asset value, or NAV, basically, the market value of the crypto they hold per share.
Okay.
And what's interesting is, back in mid-June 2025, analysis showed SharpLink's premium to its ETH NAV was about 1.6 times. At the same time, MicroStrategy's premium to its Bitcoin NAV was higher, around 1.9 times.
So SharpLink was actually trading at a lower premium than MicroStrategy, relatively speaking.
At that snapshot in time, yes, which some could interpret as SharpLink being potentially undervalued compared to its main peer if you believe the Ethereum story.
Why might SharpLink deserve or eventually get a higher premium? What's the bull case for choosing SBT?
Well, several arguments. There's the staking yield, which adds tangible returns. There's what you might call the Lubin premium, the value of having an ecosystem founder guiding the ship. There's the broader belief by some that Ethereum has more long-term utility and growth potential than Bitcoin. And critically, there's that unique growth engine, the ATM arbitrage. Selling stock above NAV to buy more ETH increases ETH per share. That's a powerful compounding mechanism if the premium holds.
Some people are even calling it a leveraged ETH play.
Yeah. You hear some retail investors talking about SBET, almost like a leveraged ETF for Ethereum, maybe like a 4x bull ETH, because of the premium and the ease of buying it in a regular stock account.
Okay, sounds exciting, but let's talk risks. Big potential usually comes with big potential downsides. What should investors worry about here?
Number one, without a doubt, is the price volatility of Ethereum itself.
Yeah, crypto swings can be wild.
Absolutely. Since ETH is their primary, almost sole, major asset, a big drop in its price would directly hit SharpLink's NAV, hit the stock price, and force them to take large, non-cash impairment charges on their books. It's direct, high-beta exposure.
Walking a tightrope there. And that ATM facility, you call it a growth engine, but it sounds like it could cut both ways.
It absolutely is a double-edged sword. Continuously selling shares, even for a good reason like buying ETH, creates ongoing dilution risk for existing shareholders.
Their slice of the pie gets smaller.
Right. And that strategy only works, it's only value accretive, as long as the stock trades at a decent premium to its NAV. If that premium disappears, or worse, it trades at a discount, then using the ATM to sell shares actually destroys value. You're selling assets for less than they're worth on paper.
A critical dependency, then. What about risks beyond the market price, within the company itself?
Sure, there's significant management and execution risk. The ETH treasury part is clear, but the grand vision of merging that with their old iGaming roots into some new Web3 gaming venture.
That's still mostly theoretical.
Largely unproven, yeah. If they can't actually build a profitable, synergistic business there, SharpLink might just end up looking like an ETH holding fund that slowly sells shares. If that happens, the premium valuation could evaporate quickly.
And the whole crypto space still feels a bit like the Wild West when it comes to rules, doesn't it?
It certainly does. Regulatory risk is huge and unpredictable. New rules anywhere in the world about companies holding digital assets, how staking rewards are taxed, maybe even restrictions on staking itself. Any of that could significantly hurt SharpLink's model.
And even with the best security.
The inherent risk of holding custody of nearly $500 million in digital assets can never be completely zero. Things can still go wrong.
Okay, so quite a few risks to watch. Looking ahead then, where does SharpLink want to go? Is it just buy more ETH forever, or is there a bigger picture?
They definitely paint a bigger picture. The leadership talks about going way beyond just passively holding ETH. The stated goal is to use their big ETH position, their access to Consensys, and their background in gaming to, quote, transform the multi-billion-dollar iGaming industry.
Transform how?
CEO Rob Fithian talks about Ethereum being the financial foundation for the next generation of online gaming and capital management. The idea seems to be building a more transparent, efficient, maybe fairer betting in gaming world using blockchain tech.
How would that actually work in practice? What could they build?
You could imagine things like using smart contracts for truly transparent betting platforms where the rules are locked in code, maybe leveraging DeFi for new kinds of in-game economies or prize pool structures, using NFTs for provable ownership of digital items or collectibles within games.
So, integrating crypto deeply into the gaming experience.
Potentially even building a fully crypto-native on-chain casino or sportsbook. They've already made a small move, investing $500 for 10% of CryptoCasino.com's owner.
A first step.
A small first step, yeah. But the market expectation is likely that they'll eventually try to build their own crypto betting platform.
So if listeners want to track SharpLink's progress on this journey, what are the key things they should keep an eye on?
Okay, number one is probably ETH per share or ETH concentration. That tells you if the ATM strategy is successfully adding value on a per share basis.
Got it. What else?
Definitely track the staking yield they're generating. Is it stable, growing? Also, keep a close eye on that premium or discount to NAV. That's crucial for the ATM viability.
And the ATM usage itself.
Yes, how much stock are they selling and at what price? That tells you the rate of dilution. And critically, watch for any actual revenue growth from new gaming initiatives. That's the proof of the Web3 vision.
Makes sense. Any big unknowns still hovering out there?
Yeah, a few key things. We don't know exactly when the shares from that big private placement become free to trade on the open market that could create selling pressure. Options just started trading on SBET in June 2025, so the full impact of that derivatives market is still unfolding. And we need more clarity on their long-term capital allocation. How will they balance buying more ETH versus investing cash into building that gaming business? That trade-off will be important.
Plus, the tax implications of holding and staking all that ETH must be complex.
Hugely complex, and not something they've detailed publicly yet. That's another big factor.
Wow, what a story. We've covered a lot. SharpLink Gaming, it really is this fascinating mix of corporate survival,
Definitely.
some pretty bold financial engineering,
Audacious, even.
and a massive bet on the future of Ethereum and decentralized tech, all steered by one of Ethereum's original architects.
It really underscores how fast things can change, doesn't it?
Yeah.
How traditional companies can get disrupted, or in this case, completely reinvented, by embracing new technologies, especially when you combine that with a clear strategy and serious capital. You know, the really interesting insight might be less about crypto itself and more about corporate finance. The ability to take a public shell, clean it up, and attract this kind of unconventional capital to build something totally new. It's a playbook others might try to follow.
Absolutely. So, as you mull over SharpLink's incredible pivot, maybe chew on this. If a company facing delisting can so radically remake itself by adopting a new digital standard like Ethereum, what does that suggest about the power of these decentralized technologies to potentially reshape even the most established parts of our economy?
Something to think about.
Definitely something to think about. That's all for this deep dive.